The next type of order is the stop loss order. The stop loss order is used to contain your losses on a trade. The stop loss order requires you to mention a stop loss price for your trade. By specifying a stop loss order, you instruct the broker to get you out of the trade if the prices reach the stop loss price. Once the prices reaches the stop loss price, your broker will automatically close your position, thereby limiting your losses. Let's say you are long 100 shares of company A at 20 and you want to exit the trade if prices fall below 18. In such a case, you can place a stop loss order with your broker by specifying the stop loss price at 18. If subsequently the stock's price falls to 18, your stop loss order will be triggered and your broker will get you out of the trade. A stop loss order can again be of two types. These are the stop loss market order and stop loss limit order. A stop loss market order tells the broker that once the stop loss price is hit, the trade should be exited at the best available price in the market, irrespective of whether the price is worse than the stop loss price or not. For example, if for a long trade, you place a stop loss market order at 18 and say there is a rapid decline whereby the prices moves from 18 to 17.8 very fast, your stop loss order will still be executed and you will get a fill at 17.80. By placing a stop loss market order, you can be sure that you will be out of the trade once your stop loss is triggered. But the price at which you get out of the trade is not certain. Stop loss limit order allows you to specify a limit price as well. For example, in case of the long trade, you may place a stop loss limit order with a stop loss price at 18 and limit price at 17.90. This will instruct the broker to get you out of the trade once your stop loss price is hit, as long as he is able to get a fill at or above 17.90. So for example, if prices suddenly move to 17.8 before your order can be executed, then the broker will not sell your stock at 17.80 and would instead wait for prices to come back to at least 17.90 so that he can get you out. In case of stop loss limit order, the price at which you will exit the trade is certain. However, it is not certain that your stop loss order will be executed. This means that there is a chance that you may not exit a losing trade even though your stop loss price is triggered. For this reason, I prefer to use the stop loss market order in my trading. With this, we have covered the basic order types. It is possible that your broker provides you some other order types as well. So in the next video, I am going to cover the different order types provided by my broker so that you get a feel for how different order types might work in real life. So see you in the next video.